Hey guys, Landy here. I want to welcome you to Landy's Crypto Corner. Today is March 15th, 2023. And as always, we're going to start off here by looking at the daily spot price action chart here on Bitcoin. And then we're going to, after doing a little bit of analysis here, we're going to move over to something that you may not have seen before, and that is the Renko chart, the Renko brick chart or Renko candlestick chart. Renko just means brick. But in this case, we're going to start out by looking at what's going on here on the daily, on the regular candlestick chart. And you can see that Bitcoin did wick up to the area that I had previously spoken about, and that is 26,500 on the high up here. We'll change that to yellow. It's a little bit easier to see. In this case on Coinbase, this is the index. I'm sorry. Let's actually go over to Coinbase. It's a little bit more accurate for the way that I do chart things out. So I think we got like 26,550. So went about $50 over what I had mentioned there at 26,500. But as I said, with the Bollinger Bands spread out like this with volatility very high in the market right now, that I wasn't looking for immediate closures above around 26,500. As you can see, we did wick that third standard deviation to the upside here. And actually, let's turn on some of the other things going on here. What is going on? So we're not seeing the labels. That's what I'm looking for. There we go. All right, so the upper third standard deviation, we wicked into it, and then we closed in between the upper first and upper second standard deviation on the daily. We have not put in a high. If we do see any closures below yesterday's wick low, that's coming in at 23,931, which would also be below the first standard deviation there at $24,000. And I want you to remember $24,000 when we go through some of these other time frames and chart types. But in this case, any closure, I would say below $24,000 will initiate a move to around the basis band there. I would say support and resistance first. We're looking at around, mid to upper $23,000, around 23,650 to around the wick highs here at 20. Well, we kind of already hit the wick highs there. So the next real area to go to would be around that 23,650. Maybe another wick below and then gets bought back up in lower term time frames or something like that. That's the first place that I would look. And then down to the basis band, which is coming in just above the wick highs of that lower high on the way down. And that is going to be around that 22,760, 22,800 area down to the close open over here coming in at 22,432. So I will say, to be quite honest, anything below $23,000, I would be looking for a run back to around 21.5, which is the lower first standard deviation and the previous low over here. I do think that this is a fairly weak high. That's one of the reasons why it was not found as a very large area of resistance on the way up. But I want to be very clear that none of these targets to the downside are really going to be available if Bitcoin is closing dailies above that $24,000, that first standard deviation up here, and continuation to run the highs again. Could happen intraday, but realistically, a daily closure above 25,350, that upper second standard deviation, is going to continue to widen the Bollinger Bands or increase the Bollinger Band with percentile here, and then make some of the higher targets available. Now you'll see slow expansion here when we are above the first standard deviation or below the first standard deviation on the lower side and the upper side. You'll see expansion, but it's usually very slow expansion. Aggressive expansion begins when you're closing outside of the second standard deviations. So in this case, closure above the upper second standard deviation at that 25,350. That opens up the highs as an intraday target. and possibly a daily target as well upon further expansion. I do think that if we see quick intraday price action up there and then we close back down below 25,350, that's going to be just more sideways price action, more range play. So I would want to see a daily closure above that 25,350 in order to raise the upper end of the targets, not only on daily closures, but wicks as well. Now, anything below that $24,000, I'm going to be looking right around that $23,000 as a main pivot, same as the previous videos and the update video. And down to the basis band there at 23,760, 23,800. Below there, I look at, this area at around that 22.5, 22.4 area as being bouncy in lower term timeframes. But realistically, I think that we run back to around 21.5 or so, possibly even the lows down here to the second and third standard deviations at $20,000, and then of course $18,000, just below $19,000 now as the Bollinger Bands are expanding still. So and realistically below $20,000, I think we make new lower lows, at least on wicks. We'd have to wait to see on dailies, but $23,000 is still going to be my downside pivot, the area that I think is very important to watch. And then, on the upper end of that, above 23,600, if we start seeing price trade around there again, and then subsequently close back above $24,000 or so, I think that's an opportunity, at least in those lower term timeframes, and possibly could be an opportunity for the daily as well. Just use good judgment with that. Now, Stoke is turned to the upside here on the daily. Still looks healthy. It's entering the bullish control zone here on Stoke. And again, I want to reiterate this. You don't need this particular indicator. This is a paid indicator from crowntrading.net. They make Crown has a crew of developers that he works with that make excellent indicators. I bought this one because I found it very useful for myself, but you do not need an indicator like this. You can just use a regular Stoke and just running a 6.3 on the K and the D reads. Now this one does have pivots. It's one of the main reasons why I purchased it, because I do find that the momentum pivots are helpful. On the daily here, we see the momentum pivot coming in at $21,000 there. Now the 2-day is also turned to the upside here, and we can see that we are above the first standard upper deviation here, with possible intraday price action coming in around that 25,660 area. If we see a two-day closure above there, we'll see nice expansion back to the upside here, or continued expansion to the upside, and a widening of the Bollinger Bands with an upper end third standard deviation target of around $27,000, just shy of that at 26,950. The big one is going to be the 3-day and the 5-day. These are going to be the big ones, staying above the first standard deviation. If things can close up above the second standard deviation, you can see that we got some contraction on the Bollinger Bands. This would start to re-expand them to the upside here. You can see that we hit the third standard deviation high on the high up there in the current 3-day candle. And I would say that if we do see by close of today, closing above yesterday's 3-day wick high, which was 710, then I would look for at least tests up to around that 25,330 area, to around that third standard deviation at 26,500 yet again. And possibly, if we can see daily closures above there, we can look for continuation to the upside, around $28,000 to $30,000, with pullbacks in between. The 5-day is closing with this 3-day, so this is really important because this is a 5-day reversal setup. We already hit the second standard deviation high. This is something I spoke about in the last video, made a highlight of, because that 26,500 was where, and still is where, the second standard deviation on the upper end, on the strong side of the Bollinger Bands, is coming in. If we do see closures above there, then we can start looking up to the somewhere in between the second and third standard deviation up to around that third standard deviation at $29,000. That kind of fulfills the targets for that $28,000 to $30,000. Closures below 23,600 on the 5-day here, and this will rise because you can see that the basis band is angled up and to the right. The first standard deviation on today's closure with today's daily, this 5-day and 3-day will close. We will see this continue up. I'm going to say it's probably going to come in around $23,800 to $24,000. So be aware of that. And today's closure, if we can close above even the close open over here at 24,281 on the 5-day, I do think that that preserves intraday or intra 5-day candle wicks up, meaning on the daily, 2-day, 3-day time frames. And then we gauge closures above or below the Bollinger Bands there and support and resistance, of course. So if we do see a closure above those candles, that keeps alive the possibility of intraday, daily, 2-day, 3-day tests up higher into around the current highs and possibly higher. So that's going to be my assessment of what's going on right now. Again, any kind of intraday price action down around 23.6 to 23.8 in and around this previous high over here, just under the first standard deviation there at $24,000 is going to be of interest. If we do, though, subsequently see a closure below $24,000, in this case, the first standard deviation is coming in at $24,052. It's kind of oscillating around with price right now. Then I would be looking for a pullback a little bit lower. Now, right now, it's just a pullback, but the longer the Bitcoin takes to, especially if Bitcoin puts in a high here, and the longer it takes to kind of bounce off, the more opportunity it presents for the short side of the trade, or the bears in this case. Right now, the bears are fighting for control of the local range. They don't have highs to protect them except, for those that got in on the wick highs here. So bears are in a precarious spot. If they can regain control, you're going to see it on daily closures below that $24,000. Now, the other thing that kind of lends confluence to this is going to be a fib. We've got our higher high wick to our last and most recent lower low. You can see that where the 9 and 21 EMA, which aren't plotted right now on the chart, but they are coming in just above the basis band, and they're bracketing this 50% of the fib retrace. You want to see things stay above that 50%, preferably above this 23,885, so 23,8, 23,9 area where the 618 is coming in. That would provide, the criteria for remaining, out of putting in a high. Intraday price action can come down there, but you want to see bounces out. You don't want to see a high put in here. Or if it's a high, you want to see a shallow high, and then, in the next candle or two, get taken out to the upside. If you're bullish and looking for further upside. If you are looking for downside, anything below that 50% at that $23,061, it's going to come down to the basis around that 22,760 to 22,8, and it's going to favor the short side of the trade if it cannot get back above around that 23,800 to $24,000. Subsequently, the line in the sand is going to be any closures below this 382, which would also be below the last and most recent lower high there at 22,236, and we start targeting the bottom side of the Bollinger Bands, lower first standard deviation, second standard deviation, third standard deviation. Right, that's probably going to put things on new lows, and it will avert a lot of what I'm going to talk to you about here in just a moment, which is going to be on the index chart. And this is Renko candles. So I'm going to show you Renko candles. Again, Renko candles are brick candles. They are, let me set it up here. Renko candles are calculated based on price movements. Now, it's either your specified price movement, so they're not time-based candles. They're price-based candles, or in this case, I have it set to the default that TradingView has, which is ATR running a 14 period. So if you would like to know about Renko candles a little bit, I suggest you go to the TradingView internal documentation. They have just a good breakdown of what Renko candles are. They're brick candles, or bricks as they're known, and you can define the price. It's down here just on your candle selection. You can define the price based on ATR, or you can go traditional, which is where you set the box size or the price movement size. In this case, the default ATR is what I've back tested and found to be very, very reliable. Now, how can you use it? Well, because it's using ATR and it's not based on the time frame. When I'm here on the daily, it's going to be the ATR basis for the daily is what is dictating the brick size or candle size. So it's the price movement within this time period that is going to be relevant. Now, all of that being said, I'm going to show you a really easy way to figure out reversals and price direction. When you see wicks where price traded on a brick but did not close below the previous brick, in this case, wicked up above it and then closed at or above the high of the brick here, you've got a 3-candle structure or a 3-brick structure reversal. Wicks are very, very important in Renko to determine or try to determine where price reversals are coming in, and or if you just get a clean brick reversal like we saw on the highs up here. So we painted a brick down. You'll see that these bricks, let's mark a few here. So we see that this brick here is coming in at 24,700. Okay, the next brick down on the low here is coming in at 21,850 because this is ATR based. So we see that we had the move down, and all bricks are going to be of equal size. So in this case, this brick here was a move from 22,800 to 21,850. We can see that that was the open of the prior brick. So closing below there by the specified ATR number, which is the internal calculation there on a 14 period. We can see that it painted a high there, but then we had a wick down below the low of the previous brick and then closed very quickly back above to put in that new high. And then we saw another brick paint after that that indicated a reversal down. We saw the wick down below that brick, bought back up, and then we see that we are marching back to the highs. So what is this telling me? Well, this does tell me if this next brick can get a closure, if we basically see price trade above 24,700, we will start to see a new brick being painted. Now you'll notice that my Bollinger Band indicator, which it's just a custom one that I have coded myself. You can find it for free down on the link in the description. It's in beta. It's private access. You can only add it to your chart by following that link. And then you can use it however you want. Give me some feedback. I'm still building the indicator. There's a few little things that I want to work out to optimize it and allow for more customization. But this particular indicator does automatically adjust, and most Bollinger Bands should, to the chart type that you have. So we see the upper second standard deviation was never hit here because it is using bricks, and that's coming in at 26,215. The intra day price action up in that area is not accounted for here. So this is based on, it's going to be based on its closing structure. So a price maintaining above 24,700. Once it does this, then it will paint a new brick. So we're not seeing that just yet, but that would indicate that we would then head up to around that 26,215. And on a regular candlestick chart, that's probably going to be swinging the local high up there at the 26,550 area on spot price. And of course, above there, 26,215 here on the Renko chart, you can see the upper third standard deviation coming in at 28,000 730. Now, that also means that any closure below this first standard deviation, which is the open of the current brick, you'll see that we have there at 23,750. We start trading down there, we are going to paint a reversal structure here on the Renko chart. Now, you typically want to see a 3-candle reversal. That would just be painting below there with targets down to 22,800. So just under $23,000 rather, which is a very important area that we were just looking at. So if that brick does start to paint down below this particular open of our current brick at that 23,700 or so, in this case it's coming in at 23,750, then we could possibly see targets down to that $22,800 to $23,000. So one of the areas that we were already interested in. If we then see it trade down there and start to pull away on the Renko chart, which would mean that we are reversing back up in those lower term time frames, then we could potentially see another scenario where we get a wick like so, and then a close back above, which then would imply continuation to the upside. Didn't just want to show you this on the daily though, because there's something interesting happening on the weekly that we have not seen in a long time. That would be the projection brick. So the projection here is that if we can maintain and paint up this brick to the next brick high, or open in this case because it's a red brick, so this would be the high or the open of the brick above us, which is $28,000 on the weekly, which means that price would need to trade to $28,000 and then it would start painting a new brick. So in this case, if we can maintain closures above where, guess what? $24,000. Very important area that we just talked about. That's where the daily on a regular chart would put in a high and then target down to the $23,000 area. We just talked about on the Renko chart for the daily, 22,800 is the next brick down below us. If we did paint in a high below 23,750. So in this case, what is the weekly telling us? If we see price trading below the $24,000 pivot, which is the previous brick's open, then we would be looking at a potential run back to the lows from the weekly perspective. That's only a potential. That's not a death sentence. And on the other side of that, if we see this brick paint up to $28,000, then we target the next areas. So in this case, because you can still get wicks where price trades above and then very quickly moves back the other way. Now here, if we see price trade above $28,000, the next area to be on the lookout for from Renko, from the Renko standpoint, would be the lower first standard deviation here, and that's coming in at 30,850. So that $28,000 to $30,000, very important. To the upside, that $28,000 would fulfill that criteria to test up there. Below $24,000, things start to look downside angled again. Obviously, putting in a high on the daily, that's what it would do on a regular chart. And then here on the Renko weekly, it would, just be a sideways brick, and or this would turn into a wick because the projection would be up and then it paints back down because it did not fulfill the criteria to the upside around that 28,000. So that's what's at stake right now. And I do want to show you that we've seen this before. Now, because of the way that Renko on ATR works, on the index chart, you're not going to get as much history. But back in 2018, what did we see? Well, we saw on the low in 2018, we wicked down on the weekly, and then we closed back up above that 12,000, and we just marched on. We then had one down week, potential reversal. We went up, and then when it went down, we started to trade above. This was in May of 2021, before the big dump off down to around 28 to 30K. And then that turned into a wick. We started trading below the previous brick, and then we closed below this brick here at $47,000, $48,000. Remember that pretty clearly. We then went down. We did a little Wyckoff accumulation on the daily of a regular chart, and then we marched on up. We had that little September, that October, September timeframe where things crashed down after coming in and completing that Wyckoff accumulation. Hit the spring, went up, mean reverted, turned into a wick, came down below the previous brick on the projection, but did not complete all the way down to $40,000. Started to trade back above that $47,000, $48,000 in this case. Trade above, put in that new higher high at that $69,000 price point. Painted the down brick, and then down, down, down we went. We did try to back test back here at that $48,000. We did not meet the criteria there on Renko for $48,000 because it bounced off it on the daily, and then painted it right back down below the previous brick at that $40,000, and then on down. So it's a very clean way to look at price action. I did want to present that to you because this is the first time since back here in May of 2022 that we have seen the projection for these bricks or candles trade above the prior brick. So it is significant here on the weekly that we have not seen this in quite some time. So could it turn into a wick? Well, if it starts to paint back down below $24,000, absolutely. The only way that it's going to paint a new brick, though, is if we see price trade below $20,000 again. So if we see price trade below $20,000, this particular brick would be a wick, and then we'd start looking lower. I would not be using the standard deviations here, and on the weekly here, there's not enough history when looking at a Renko chart. So keep in mind that it's not, even if it does line up in certain areas, second standard deviation to the upside, second standard deviation to the downside areas being these rotation points on the chart. I would not be using it that way because there's just not enough history here for the Renko chart and the Bollinger Bands. So I did want to present that to you guys. I hope that you found that interesting. If you have any questions, go ahead and ask them in the comments down below. Of course, for those of you that are in the Discord, you can ask me questions there as always. And if you did find any of this information helpful or useful, please give me a like and a subscribe, and then go ahead and share it with some other people if you would like, if you think they'd find it helpful as well. I do want to say thank you, and I hope you have a good morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. And with all of that being said, Landy out.